Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze Starbucks stock. Specifically, I'm going to talk about why I think Starbucks stocks is likely undervalued now. If you have been following my channel, you will know that I am mainly a growth stock investor, but I do invest in dividend growth stocks if they are undervalued. When I invest, I always look for the best companies that have large economic moats, great products and services, great management teams, great long-term growth prospects, increasing earnings, and increasing free cash flows over time. Also, when I invest, I like to buy the stock only when it's fairly valued or better when it's undervalued. At the time of making this video, the S&P 500 is very close to another all-time high. This huge rally is mainly driven by the largest mega-cap tech stocks, such as the Magnificent Seven tech stocks. The mega-cap tech stocks such as Apple, Microsoft, Google, Nvidia, Amazon, Meta, and Tesla have the largest impact on the S&P 500's overall return because they have the largest weight percentage in the S&P 500. Without the Magnificent Seven stocks, the S&P 500's past 1 year return would be much lower. This is why you can see the equally weighted S&P 500's return was much lower than the regular market cap weighted S&P 500 over the past 1 year. This means many stocks outside the tech sectors are still much more fairly valued or even undervalued. In this case, I'm going to explain why I think Starbucks is likely undervalued now. There are several short-term headwinds and risks that are affecting Starbucks right now. You will learn about these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about Starbucks' biggest headwinds and risks, Starbucks' long-term growth prospects, Starbucks stock valuation, and will I buy Starbucks stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent portfolio reviews and stock analysis videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about Starbucks' biggest headwinds and risks right now, I'd like to give you a quick stock portfolio update. This is one of my stock portfolios. I also have other portfolios that have almost the same stocks and the same investing strategy as this portfolio here. In many of my YouTube videos, I like to share with you this stock portfolio to show you my investing strategy over time. Here, you can see that this portfolio has done exceptionally well. In fact, it has been outperforming the S&P 500 by a large margin since inception because I have invested in many outstanding tech companies such as Apple, Google, Microsoft, Amazon, Nvidia, Meta, TSMC, and ASML. I started a new position in MSCI Inc. in this portfolio recently. The only two companies that are down temporarily are MSCI Inc. and Tesla. I'm not worried about them at all. As long as their businesses continue to do well over the long term, their stocks will also perform very well over the long term. Over the past 1 year, I sold some stocks and made these realized gains. I normally don't sell stocks. I tend to just buy and hold the best businesses for the long term. I usually sell stocks only when I can find better opportunities to reinvest the capital in better companies that are more undervalued. For example, I invested in Starbucks several months ago. Then when Starbucks became overvalued last year, I decided to sell Starbucks because I found other companies that were more undervalued. So this strategy has worked very well for me for many years. Now at the time of making this video, I believe Starbucks is likely undervalued again because of several short-term headwinds and risks that are affecting Starbucks right now. So what are Starbucks' biggest headwinds and risks right now? Here is Starbucks' first biggest headwind. A few months ago, Starbucks gave this guidance during an investor event. In fiscal 2024, Starbucks initially expected that its revenue would grow 10% to 12% year over year and expects that its comparable same-store sales would grow 5% to 7% year over year. Recently, Starbucks has lowered its revenue guidance for fiscal 2024. Now, Starbucks expects that its 2024 revenue should grow 7% to 10% year over year, down from the previous range of 10% to 12%. Starbucks also expects that its same-store sales growth should be lower at 4% to 6% year over year, down from the previous range of 5% to 7% year over year. Of course, this doesn't look good for Starbucks at all. This is why Starbucks stock has been down recently. This is what Starbucks management said in the most recent earnings call. Starbucks management said that the company is facing several headwinds that are affecting the company's sales in 2024. These short-term headwinds include the current Israel-Hamas war in the Middle East, social media boycotts against Starbucks, a lot of competition in China, and much slower economic growth in China. Starbucks management said this. Beginning in mid-November, while our business continued to grow, the growth rate was impacted by three unexpected factors. First, we saw a negative impact to our business in the Middle East. Second, events in the Middle East also had an impact in the US, driven by misconceptions about our position. But we did see a softening of US traffic, specifically our occasional US customers who tend to visit in the afternoon came in less frequently. Finally, we experienced a slower than expected recovery in China, driven by a more cautious consumer. While we had a relatively very strong November 11 holiday, the overall market weakness had led to significantly increased pricing competition. In my opinion, I believe these are short-term headwinds. I don't think these headwinds affect Starbucks businesses in the long run. For example, these headwinds are affecting most restaurant businesses that have large exposure in the Middle East, including McDonald's, Starbucks, Yum Brands, and Burger King. Here's Starbucks' second biggest headwind. At the time of making this video, Starbucks is facing a lot of competition in China. For example, Luckin Coffee has already become the largest coffee chain in China, and it has more stores than Starbucks in China. Coffee Coffee is also another major competitor to Starbucks in China. China is Starbucks' fastest growing market, but here's the problem. Based on what I know, these Chinese coffee competitors tend to target customers who want to buy cheaper coffee. Their coffees are usually cheaper than Starbucks coffee. Starbucks tends to target higher income and more wealthy customers in China. Starbucks coffee is generally much more expensive than other coffee stores in China. At the time of making this video, the Chinese economy is not doing well at all. The Chinese real estate market is in a huge slump. Several large real estate developers have already defaulted in recent months. The Chinese economy is having deflation right now. Many younger adults who recently graduated from college cannot find jobs, so many of them continue their studies instead. Also, consumers are cutting back their discretionary spending in China because they are worried about the overall economy. Chinese customers are even more price sensitive now. I wouldn't be surprised if Starbucks will have slower growth than expected in China throughout 2024 or even 2025. For example, previously, Starbucks expected that its same-store sales in China would grow around 4% to 6% year over year. Now, Starbucks expects that its same-store sales in China will have very low single-digit growth in fiscal 2024. It will probably take China's economy at least several years to recover. Again, I think this slower growth in China is only a short-term headwind for Starbucks. I want to show you these past financials here. Here you can see that Starbucks has had fairly consistent revenue growth and operating income growth over the past 10 years. Starbucks has had fairly consistent free cash flow growth in most years in over the past 10 years. Here's the important part. Right now, Starbucks has a negative book value because Starbucks has been returning more capital to shareholders than the company's retained earnings. This is very common in the restaurant industry. Many mature businesses such as Starbucks, McDonald's, and Domino's Pizza have negative book values because they have been returning more capital to shareholders than their retained earnings. Going forward, Starbucks' negative book value will continue to grow over time because Starbucks will continue to buy back more shares and increase dividends over time. I think this is sustainable as long as Starbucks continues to have higher revenues, higher earnings, and higher free cash flows over time. Here's another thing we should consider when we look at Starbucks business. Starbucks tends to issue more debt over time in order to buy back more shares and pay out dividends to shareholders. So it's very important that we look at how much debt and cash Starbucks has on its balance sheet. At the time of making this video, Starbucks has around $3.62 billion in cash equivalents, short-term and long-term investments. For comparison, Starbucks has a total of $24.5 billion in short-term and long-term debt, as well as operating lease liabilities. This debt level seems to be a lot if we compare it to Starbucks' cash equivalents right now. But if you look at these long-term debt maturity dates, you will notice that around $1.1 billion of debt is maturing within a year in 2024. Around $3.85 billion of debt is maturing within 3 years, and the rest debt is maturing much later. Personally, I believe that Starbucks' current level of debt is very manageable because most of its long-term debt has maturities that are spread out over the next 20 plus years. When it comes to investing, we have to be forward-looking instead of backward-looking. So what are Starbucks' long-term growth prospects? Starbucks gave this long-term guidance during an investor event a few months ago. Over the long term, Starbucks management expects that the company's revenue should grow 10% or more each year. Same-store sales growth should grow 5% or more each year, and earnings should grow 15% or more each year. In my opinion, I believe these long-term growth rates are reasonable. Here's why. To achieve this, Starbucks is planning to build a lot more stores around the world, especially in China and in the international market. Starbucks will continue to release new drinks and new food that are tailored to the local markets. Starbucks will add more rewards to its rewards membership program in order to attract more loyal members. Starbucks active rewards members tend to spend a lot more than non-active members, so Starbucks wants to increase the number of active members a lot more going forward. At the time of making this video, Starbucks has around 34 million active members in the US, up 13% year over year. Starbucks will continue to improve its operating margin and reduce its operating expenses over time. Starbucks' operating expenses are expected to grow slower than its revenue growth going forward. This is why Starbucks' earnings will likely grow faster than its revenue growth going forward. To be more specific, Starbucks is planning to have 20,000 plus stores in North America and 55,000 stores worldwide. At the time of making this video, Starbucks has around 18,000 stores in North America and 38,587 stores worldwide. In China, Starbucks only has around 6,975 stores. China is expected to be the fastest growing market for Starbucks because Starbucks has not expanded to many smaller cities and areas in China yet. More importantly, many customers are drinking coffee in China now, especially younger customers. I said this earlier, the biggest headwind is that the Chinese economy is not doing so well right now. The Chinese economy is recovering much slower than expected. Also, there's a lot more competition in China now. Chinese customers tend to be very price sensitive, so they're likely to reduce their spending on premium coffees like Starbucks, especially during economic downturns. But I believe this is only a short-term headwind for Starbucks. This is based on my experience drinking coffee for many years. I believe Starbucks' biggest competitive advantage is its premium branding and how it attracts customers who are generally wealthier and have higher income. Starbucks branding is recognized everywhere around the world, similar to McDonald's branding. When people think about coffee, they tend to think about Starbucks first. Also, it's very easy to be addicted to coffee. Once you are used to drinking coffee every day, you will likely continue for many years. I believe this gives Starbucks a huge competitive advantage because most customers will think about Starbucks first instead of other coffee brands. For example, Starbucks coffee and food tend to be more expensive than other competing coffee stores that offer very similar coffee and food, but many people who are not very price sensitive still buy coffee from Starbucks. If you're doing business and you want to meet your clients or your business partners at a local coffee shop, you will likely meet them at Starbucks instead of McCafe or Dunkin' Donuts. I think the biggest reason is Starbucks' premium branding. Starbucks has a much better premium brand than most coffee shops. The second reason is that Starbucks stores are much nicer than most coffee shops, so customers are willing to pay higher prices to buy from Starbucks. Also, Starbucks has many locations, especially in North America, so many customers like to go to Starbucks if they want to meet with their friends, colleagues, or clients. The third reason is Starbucks rewards system. Based on my experience drinking Starbucks a lot, I think Starbucks has a very good rewards system. It encourages loyal members to buy more coffee and food by giving them better rewards. I mentioned this earlier. At the time of making this video, Starbucks has around 34 million active rewards members in the US, up 13% year over year. At the end of fiscal 2023, Starbucks had 75 million global active rewards members. Starbucks is aiming to double its global active rewards members within 5 years by giving out more promotions and better rewards to customers. Here's another interesting thing about Starbucks' business model that is not well known to many investors. Starbucks receives a large amount of interest-free deposits from loyal customers every year. Typically, Starbucks receives these deposits whenever customers add more funds to their Starbucks cards or whenever customers buy Starbucks gift cards. Unlike traditional banks, Starbucks does not need to pay interest for these short-term deposits. Customers can only withdraw these funds to buy Starbucks items, so these funds from customers are essentially deferred revenues for Starbucks. More importantly, Starbucks can use these short-term funds as working capital without paying any interest. Also, every year, a portion of the unused funds is not redeemed by customers, so these unused funds eventually become breakage revenues for Starbucks. These breakage revenues are essentially free revenues for Starbucks. For example, Starbucks had breakage revenues of $196 million in fiscal 2022 and the same amount in fiscal 2023. These breakage revenues seem to be a lot, but in fact, they are very small compared to Starbucks' total revenues each year. For example, Starbucks' breakage revenue was only about 0.5% of the company's total revenues in fiscal 2023. I think the biggest benefit of these short-term deposits from customers is that they are interest-free and that Starbucks can use these short-term deposits as working capital. I want to show you Starbucks' dividend history here. Starbucks has been increasing its dividends every year for 13 years already. According to this consensus dividend forecast here, Starbucks' dividend yield is expected to increase to 2.95% by fiscal 2026, up from the current forward dividend yield of 2.45%. In terms of revenue forecast, Starbucks' revenue is projected to increase by 8% to 10% annually over the next 5 years. Interestingly, these consensus revenue forecasts are more conservative and lower than Starbucks' long-term revenue guidance here. Again, over the longer term, Starbucks management expects that the company's revenue should grow 10% or more each year. In terms of EPS forecast, Starbucks' EPS is expected to grow by 15% to 20% annually over the next several years. Over the longer term, Starbucks management expects that the company's EPS should grow 15% or more each year. I want to show you how to calculate Starbucks stock's intrinsic value here, so you will know when Starbucks becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Starbucks' intrinsic value as its future free cash flows discounted to the present day. I use a discount rate of 9.8% here. You can use a higher discount rate here if you want to be more conservative. Based on the short-term headwinds and the long-term growth prospects I talked about earlier, I believe Starbucks' revenue will grow at a compound annual growth rate CAGR between 8% and 10% annually over the next several years. This is slightly lower than Starbucks' long-term revenue forecast. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that Starbucks revenue will grow at a CAGR of 8% over the next several years. If we forecast Starbucks free cash flow over the next 5 years and discount the free cash flow to the present day, Starbucks intrinsic value should be around $96 billion for the entire company, or $84 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that Starbucks revenue will grow at a CAGR of 9% over the next several years. Then Starbucks intrinsic value should be around $101 billion for the entire company, or $89 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that Starbucks revenue will grow at a CAGR of 10% over the next several years. Then Starbucks intrinsic value should be around $107 billion for the entire company, or $93 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Starbucks intrinsic value should be around $89 per share. I also use a forward price to sales valuation model here to estimate Starbucks intrinsic value, which should be around $140 billion for the entire company, or around $122 per share. If we take the average of both valuation models here, I believe Starbucks intrinsic value should be around $106 per share. Just to compare, Morningstar gave Starbucks a very similar fair value at $105 per share. This means I believe Starbucks is likely undervalued at the time of making this video. So will I buy Starbucks stock? Personally, I am focused on buying more tech stocks right now, especially the Magnificent 7 stocks that have large exposure to AI. I'm waiting for them to become more undervalued. I may buy back Starbucks shares over the next few months if Starbucks continues to be undervalued. I don't have Starbucks in my portfolios right now. I believe the headwinds I talk about in this video are only short-term headwinds. I don't think they affect Starbucks' business and branding over the long term. Starbucks will continue to buy back a lot of shares and pay higher dividends over time. Also, I believe Starbucks can achieve an annual revenue growth rate of 8% to 10% and an annual EPS growth rate of 15% over the next several years. I believe these growth rates are reasonable and achievable. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. I think it's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.